A conversation about this data with Lawrence Yun, the National Association of Realtors Chief Economist and Senior Vice President of Research. Lawrence, thanks so much for being with us just as we are getting this data in. As Brad was mentioning, that headline down 0.7% from the prior month. What sticks out to you about this data that we're getting in that you think kind of defines what we are seeing and what you're seeing in the broader housing market right now?
Good morning. So the home sales decline of less than 1%. I mean, that's essentially unchanged. In fact, home sales have been stuck at that 4 million, little above, little below that level for the past 12 months. So nothing exciting related to home sales. I'm a little frustrated that we are not seeing a recovery. That's partly due to the delay in the rate cut decision by the Federal Reserve. But what's striking is all-time high in the median existing home price. So we are now seeing some acceleration in prices. Multiple offers are still happening in the marketplace. Maybe one welcoming news, potentially a forward leading indicator in the future, is we are getting more inventory. So as more inventory begin to show up, maybe more consumers recognizing there are more choices will consider reaching into the market.
Yeah, it's really interesting, Lawrence, especially when you were talking about the number of bids and multiple bids that are being made for properties here, and especially how that cascades through to, or at least translates through to, the amount of days that properties remain on the market, that edging just slightly lower, at least sequentially here, but still up from what we had seen last year. What's your estimation or evaluation of how, if we were to see rate cuts, we would see even more bidders hop into this market?
The mortgage rates, that is a highly influential factor for home buying. We always see when the interest rate decline, there are more buyers coming into the market. Now, good thing that we have more inventory, but I also believe when the interest rates are cut or steadily decline, we will actually have more sellers coming onto the market. We know about the golden handcuffs, people loving their 3%, 4% mortgage rate, not willing to give that up. But there are life-changing circumstances where maybe perhaps people have reached the retirement age and they want to trade down. Maybe some young households where they have a starter home, but they need a larger size home now, so they will put their starter home onto the market. And all this job changes that's happening across the country. People have different job, different location, but the same house, which means that commuting patterns have changed. So I think it's just inevitable that the strength of the golden handcuffs will steadily weaken over time, but it will weaken even more when the interest rate decline. So expect more buyers when interest rate decline, but also expect more sellers to come onto the market as interest rate decline.
Well, it's interesting that you point that out because there's this question out there about what interest rates are going to do to home prices. And I'm curious from your perspective, when we do at some point get that initial cut from the Federal Reserve, what does that do to demand in the month after that? And what does that do to prices just in that immediate reaction after that cut?
The mortgage market, which is not directly controlled by the Federal Reserve, so the mortgage market will be moving ahead of the Fed decision based upon how they communicate when it is likely to be rate cut. So the movement of the mortgage rate will not happen on the day of the Federal Reserve decision, but rather maybe even a couple of months prior to that. So as a consumer, they should always be on the lookout as to what's happening on mortgage rates, say this week, next week. And if the right property comes onto the market at within their budget, maybe just give it a try and to see whether or not they can get a little discount. Now we have more inventory, and certainly a good news for consumer choices.
All right, Lawrence, we're going to have to leave it there. Thank you so much for joining us. That was Lawrence Yun, National Association of Realtors Chief Economist and Senior Vice President of Research.